welcome to EconVersations. I'm your host, Dr. Dan Sutter of the Johnson Center for Political Economy at Troy University. The mission of the Johnson Center involves conducting research and teaching on economic freedom. But what exactly is economic freedom? Why is it so important that economists be able to measure economic freedom accurately? And how does this advance our understanding of prosperity and the factors that might cause economic freedom to wax and wane? And how does Alabama stack up among other states on economic freedom? Joining me on the show today to talk about the measurement of economic freedom is Dr. Dean Stansel, a research associate professor of economics with the O'Neill Center for Global Markets and Freedom at Southern Methodist University. Dr. Stansel graduated with a PhD from George Mason University in 2002, and his research has long focused on state and local public finance. Dr. Stansel is one of the leading experts on the measurement of economic freedom. Welcome to the show, Dean.
Thanks, Dan. Thanks for having me on.
So, to get started here, let's begin with the question of the project that you're currently involved with in conjunction with the Fraser Institute, this Economic Freedom of North America project. Tell us a little bit about this project.
Sure. So about 30 years ago, Milton Friedman and some others got together and said, look, wouldn't it be a great idea if we could measure how free different economies are, different societies are, so that we could then use that to talk about different reasons why they're free. And so the Fraser Institute is a think tank in Canada that published that. That was called the Economic Freedom of the World. The project I got involved with a few years ago is a spin-off of that does the same exercise at the state level. And so I got involved with this 3 years ago, and it's an annual report. This one that came out in December was the 11th, if I remember correctly. And so it's a big initiative for me. It takes up a big chunk of my time, especially in the summer, pulling the data together and all that. But it's an effort to show which states are most free and which states are least free.
Now, also at the O'Neill Center at SMU, you've Dr. Bob Lawson, who's one of the lead authors on the Economic Freedom of the World report. So, I mean, economic freedom is an important part of your research mission there at the O'Neill Center,
absolutely.
Right?
Yeah, I just started in January at the O'Neill Center for Global Markets and Freedom. The O'Neill Center was started by William O'Neill, who was the founder of Investors Business Daily, my favorite business newspaper. But yeah, Bob Lawson, who is one of the authors of the Economic Freedom of the World report, is there as well. And so we've got the World report and the State report all here together at SMU in Dallas.
So the economic freedom is a big part of the Johnson Center mission. We use the term a lot, but I think it's probably best to start today by talking a little bit about reminding everybody exactly what we mean by economic freedom.
Sure. So you could look at a textbook definition here behind us, or the way I'd like to put it in more common terms is simply the ability of individuals to do what they wish with their own resources, their time, their money, etc., as long as they're not hurting other people. And so we're economically free when we can do that, and when we have restrictions on that freedom, then we're less free. So the states that have more restrictions end up at the bottom of the rankings, and the states where you have fewer are at the top.
So if you're free to start a business or choose a career of your own choosing, or spend your money that you earn how you want to spend it, that's what we mean by economic freedom, right?
Absolutely, yeah, that's exactly right.
And it's something that we certainly would value on a personal level. We most of us like freedom.
Yeah, I think it's hard to argue that more freedom is good. Hard to argue against that. Now there are other kinds of freedom, of course, personal freedoms that are harder to measure, and they're not incorporated here at all. We're just looking at economic freedom, and and that can matter to a certain extent. If you look at the World Report, the top two countries typically are Hong Kong and Singapore, which personal freedoms there aren't a big priority, right? So a lot of us maybe wouldn't want to live in a society like that, but economically they're very free. So you have that same disparity at the state level, but we don't incorporate that. We're strictly looking at the economic side of it. It's a lot easier to measure.
And I guess the cases of Hong Kong and Singapore would indicate you're also not looking at political freedoms, like the freedom to vote or something like this. This is more just the economic freedoms.
Sure, and I think at the state level there's probably less variation in that than across countries, but yeah, that's not incorporated here either. Not directly, at least.
So after you estimate economic freedom, you come down with a score that you assign to states, right? So tell us about these scores.
Sure. So we have, with the state report, we have three areas. We have the government spending, we have taxes, and we have labor market freedom, essentially a proxy for regulation in general, but we're looking strictly at labor markets. And so within each of those areas, we have 3 or 4 statistics or variables that we use. We collect data on that. We divide it by personal income typically to make it comparable across states that have different levels of income. And then on each variable, we give them a score from 0 to 10. So we're basically grading on a curve. Whoever has the best score gets a 10, perfect score. Whoever has the worst gets a 0. And then we just average those across. So if there's 3 areas or 3 variables in area 1, average those 3, get an area 1 score. Same thing in area 2, same thing in area 3, and average the 3 averages to get our score. And as you have here, Alabama's in the middle of the pack with the most recent report. They had a score of 6.9. Florida and Texas are tied for 3rd with a score of 7.9. And then if you look at the neighboring states here, with the exception of Mississippi, which is near the bottom, all the neighboring states around Alabama do a good bit better. So there's room for improvement.
So a better score or higher score is better for these.
Right, higher scores.
10 would be sort of like, well, I guess it wouldn't be the highest score possible. It was the highest score attainable given that what other state,
right.
levels of
Yeah,
freedom.
again, we're grading on a curve. Yeah, so you get a 10 if you're the best of the 50 states. That doesn't mean you're perfect, right? So otherwise everyone would fail. So we do grade on a curve. The highest score is somewhere around 8.2, if I recall, for New Hampshire, and South Dakota's close behind. But of the big states, Florida and Texas are right there at the top. And by the way, New York and California are right literally at the bottom, 49 and 50.
So we're about middle of the pack as of the most recent rankings, which were in 2013, right?
Right, so there's a 2-year lag. This report, the most recent report came out in December, but it's data for 2013 because of the time lag between when the government puts out comparable data for the 50 states and that sets us back a bit.
And here we have a graph showing you have these, you've calculated these indices for the states all the way going back to 1981.
81,
right?
yeah. So we've got 33 years of data, and every year, if we make a little change in the methodology, well, then we go back and adjust the scores for each year. So yeah, we've got a nice graphic here that shows Alabama's with the blue line and U.S. average with the red line, and Alabama is pretty well followed the same basic trend. I'd say if you look at this closely, more years than not, they're actually a bit above the average, but nevertheless, they're right there in the middle of the pack, and so there's room for improvement, no doubt.
So we've been pretty close to following the national average.
Yep.
For this, so we're hardly a bastion of freedom, but we're not in New York or California.
Could be worse. Just go next door to Mississippi.
Yeah. So largely sort of middle of the pack here. Right?
Yeah, you got it.
Now, before we, as you mentioned, it was about 30 years ago when Milton Friedman and some other economists raised this issue of trying to measure economic freedom. Let's talk a little bit about why it's important to measure economic freedom, what all goes into this beyond, what all goes into this. And in particular, how does this, the economic freedom scores help economists do a better job measuring the role of government in an economy relative to like what we had before this?
Sure. So previous to the existence of these economic freedom indexes, people would use things like government spending as a percentage of the economy or taxes as a percentage of the economy, and those are factors in what we do here. But it doesn't capture everything. It doesn't capture regulatory policy, and that can be very burdensome to businesses in terms of their ability to succeed. And so what these economic freedom indices do is they incorporate things like that. And at the national level, you've got things like international trade and the monetary system that aren't really issues at the state level report that I do, but that vary widely across countries. And so the ability to incorporate those just gives us a more comprehensive measure of how free each society is. And the reason it matters is that it gives economists and other academics an ability to kind of test their theories, right? We all have theories about how the world works. And one theory is that the more freedom we have, the better off we'll be. And these indices are a great tool for that, and enabling us to test that hypothesis. And when it's been tested, it's largely been proven to support the idea that freedom leads to good outcomes.
And again, this is when we think about regulation, that's important because although government bears some cost, there is some cost to government of implementing a regulation. It's not the type of thing that occurs on the budget. So if you look at like spending, back in the 1970s when we were having gas rationing or gas shortages due to economic policies.
Right.
but they were not policies where you could look and say like, oh, well, the government is spending $5 billion on this, and here's the outcome. It's one of these more invisible policies, right?
Absolutely, yeah. And in fact, if you look at what's called the Federal Register, it's a list of all the different regulations. There's 81,000 pages. And at some point, someone did some math and said, well, if this was my full-time job reading that, how long would it take me? It turns out it'd take 2 years to read through the Federal Register list of regulations. So there's tons of them out there, and they're not reflected in spending numbers. They're not reflected in tax numbers. So it's important to incorporate that too, and it gives us a better measure of how free we are.
And I suppose in the 2 years it would take you to read last year's Federal Register, there's 2 more years.
You got 2 more to read, yeah.
So you'd be 4 years behind.
An army of 3 people.
And of course, the ability to trade internationally is really important for the global economy, because international businesses can't plan to have worldwide supply chains if there's some uncertainty as to whether or not they're going to be allowed to trade, right?
Right, absolutely. And that freedom to trade is so important for consumers in terms of their ability to get low prices, that it's a big factor that when countries step up with trade restrictions, it really harms consumers and it makes them worse off. And you hear in the presidential debates issues with some of these candidates wanting to crack down on other countries' exports here, and that would be bad for consumers. It would make us less free and make us poorer.
And that's all part of economic freedom, and it's all why it's important to have this broader measure of
more than just
what
taxes
all the government's
and spending.
doing.
Yep, absolutely.
Now, once we have these this measure of economic freedom, we can start to do some analysis on these. Hinted at this, but
Sure.
we can start to break down. We have the idea or the expectation that freer economies should perform better than economies being managed or run by the government. But now we get to test this with a nice measure that not just is government spending, but all these different elements of government, right?
Right. So over the years, there have been over 600 articles using the Economic Freedom of the World Index, the country level one, and there's been over 130 using the state level index. And so with those independent studies, they're looking at all sorts of factors, other factors that can also have an impact on things like economic growth, and finding that economic freedom is correlated with growth. What I have here is simply a chart from the report itself, the most recent state level report, where we've grouped the states into 4 categories: most free, the next most free, et cetera, then least free, and looked at, because we have Canada and Mexico in the index as well, of course, because it's the economic freedom of North America. In order to make these comparable, otherwise Mexico would be at the bottom because they tend to be least free and their income's lower. We looked at the per capita income compared to their national average. So what we have here is the most free states had incomes about 7% above their national average. The least free had incomes about 7%, almost 8% below their national average. So about a 15 percentage point differential there, which, hey, that's significant, right? We'd all like to have 15% more money.
And we see similar analysis when it's done with the economic freedom of the world numbers across countries, right?
Yeah, same basic chart, except here we're looking at gross domestic product per capita and seeing how in the most free countries, that's much higher. It's at about 39,000. In the least free, they're way down at about 7,000.
And again, without this whole type of analysis, and then he says now in a scope of hundreds of pages, I mean, you can't do that type of analysis to try to figure out exactly how much economic freedom is contributing to economic growth or economic performance unless you have a good measure of economic freedom.
Right. The good measure is an important part of that, and it's crucial that we and these things are a work in progress. It's crucial that we continue to fine tune them and improve their accuracy, and we do that every year.
Now, let's go into a little more detail, because one of the things that you're an expert on is actually going through the details here and measuring and coming up with these measures of economic freedom. So let's start with the economic freedom of the states, or I guess the North America one, and just talk a little bit about these different areas that are measured in the index.
Sure. So we have government spending and taxes as separate areas because, of course, at the state level, states get differing amounts of money from the federal government. So taxes and spending overall don't necessarily match up because some of that money you're getting to spend is from federal government, from taxpayers elsewhere. So we have a government spending area where we have 3 different variables, basically 3 different types of spending. and then we average across those three. In the taxes area, we have 4 variables. One is for income taxes, one is for the income tax rate. So we've got the income tax in there twice because we feel it's the most harmful tax of the various types of taxes, most harmful to freedom and to growth. And then we look at sales taxes, and then all the other property and all the other taxes are kind of lumped together. So we average across those 4 to get a score for that variable. In area 3, we focus on labor market regulations in particular. We look at things like the minimum wage and the number of government employees per compared to the workforce as a whole. And by the way, on that variable, Alabama does particularly poor. We've got a lot of government employees in Alabama.
And then when you look at economic freedom at the national level, it can encompass a few more things.
Yes.
National governments have the ability to undertake some policies that state governments don't.
Right. So there's a lot of wider variation across countries because they do have a lot more responsibilities. So they lump spending and taxes together in Area 1, where they look at size of government.
Okay.
The Area 2 gives you a feel for the strength of property rights and the soundness and the quality of the legal system. And that can vary widely. And if you don't have strong property rights, it's difficult as an entrepreneur to see it as a good thing to invest in your business, because who knows, what you bought might be gone tomorrow, either nationalized by the government or stolen because they don't protect property rights. The soundness of the money system is important, and that certainly varies widely across countries. As to, you have countries with rampant inflation and then countries with more moderate inflation. The freedom to trade internationally, as we spoke about earlier, is crucial to the ability of consumers to get low prices, and then regulation in general at the end.
Well, I mean, also legal systems can be important across states, because state laws vary, and they govern a lot of commercial transactions here in the United States, right?
Right. So we set up recently, just last year, a network of state think tanks. It's small but growing, and we're working to increase our ability across states to measure that, because that is an area where we could certainly improve on our index and make it more reflective of the fact that in some states your legal rights are much weaker than in others.
In addition to being able to use economic freedom to analyze economic performance, you can also look at some of these some of the components of economic freedom to give a better assessment of where a nation or a state stands, and thus therefore what you might be able to do to improve economic freedom as well, right?
Right, absolutely. Yeah, and often that's one way to look at it. Here's a good example for the state of Alabama, where the blue column there is Alabama's score in the most recent report, and the red is the U.S. average. If you look at the government spending score, they're right in the middle of the pack, right at the U.S. average. Right. Whereas on taxes, they actually do much better, in part because although you do have an income tax here, the rate is quite low, and the amount of revenue brought in is quite low relative to most other states with income taxes. On regulation, Alabama is well below the U.S. average. Part of this is driven by the minimum wage. I know you don't have a state minimum wage, but the federal minimum wage is a bigger percentage of income in states where incomes are lower. So that kind of skews downward for all the states with lower incomes. But as I said a minute ago, the government employees as a percentage of the population, in other words, what percentage of your workforce works for the government? Well, it's about 12.4%. And that ranks Alabama 41st. So it's well above or below, depending on how you look at it, much worse than in most other states in terms of how many of your workers work in the private sector versus the public sector.
And so maybe the size of our public sector in terms of employment will be one of the areas we might need to try to look at if we want to try and improve the economic freedom score.
Right. Yeah, that'd be a good place to start. And even though spending is at the national average, of course, any chances you have to reduce spending is going to make you better in comparison to your neighbors. And really, what it comes down to, and you showed the slide earlier of how Alabama ranks compared to its neighbors. States compete, right? States compete for businesses and residents, and if you have less economic freedom than your neighbors, you're going to have a harder time getting people to move there, getting businesses to move there. So it's this comparison between neighbors that's really most important. And so anytime you're out of whack with the neighbors, you got to try to. And I think it's also
relevant to point out that New York and California can have somewhat lower economic freedom because they have some industries or things that are attracting people to those states other than just economic freedom, right?
Right, right. So you could say, people are willing to live in New York City and pay all those high taxes because it's the biggest city in the country, and it's the center of entertainment and arts and culture and all this stuff. And California is a physically beautiful state, and there's lots of areas like San Francisco and Los Angeles where people just want to live because there's unique amenities there. And it's true, people will put up with a lot of excessive government to get those amenities, but if you look at migration patterns, I mean, people are fleeing California for states like Texas and Florida. People are fleeing New York and moving to lower tax, warmer, also probably has something to do with it, places. And it's so people are voting with their feet, but yeah, there's an attraction to those places that allows them to be last in economic freedom and still have some people there paying the bills.
Now, if you can, just go into this, because I think it's always important for us as economists to talk about the type of work that we do as, the main part, a big part of our work, which is doing research. So tell us a little bit about how you go about compiling this economic freedom index for the states. What's some of the work that's involved with that?
Sure. So the Census Bureau, the U.S. Census Bureau, the same people that do the census every 10 years, they do a census of governments. So they collect data from the state governments, from the local governments. This is state and local numbers here, not just state. So they survey all the local governments. They take that and then they put it together in a way to make the numbers in Alabama comparable to the numbers, in Texas or whatever, because different accounting systems in different states. You can't just kind of go and collect the data from Texas and Alabama and Mississippi yourself. It'd be a lot harder anyway, but they're not going to be comparable because of different accounting terms. So the Census Bureau does a pretty good job of making them comparable across all 50 states, which is why it's lagged, right? It takes some time to do that. That's why they're 2 years behind always. But so that data is put out there, pull that down into a spreadsheet, find the personal income data so that we can look at a state like New York that has high income versus a state like Mississippi that has low income. Well, you don't want to look at on these numbers on a per capita basis, because in Mississippi a per capita tax of $5,000 is going to be much more burdensome than in New York. So we look at it on a personal income basis. That data is much more updated, but you throw that in there, and then I also have to collect the data for Canada, because we've got Canada. It's a product of the Fraser Institute, which is a think tank in Canada. So we collect the data for Canada. We've found someone in Mexico who is an expert in getting the data for the Mexican states. So he does that part for us. And then we've got to do some calculations to get these 0 to 10 scores. And then we average those, throw it together, kind of look at it and say, does this make sense? Because hey, let's face it, there can be data errors, right? Sometimes there are states where maybe there was literally just a typing error in one of the things that they reported, and if it's bad enough of an error, it'll skew the rankings, and we'll eyeball it and be able to catch it. But it's a big chunk of my time, basically mostly in the summer, getting through that and getting it ready for the release in the later.
And then you also do some work. You were saying about trying to see if there's some way we can better measure economic freedom. So you're also tweaking exactly how we want to try to measure this, right?
We met last June in Dallas and had about, I think, 10 or 11 think tank folks from state think tanks, and we actually got a real good piece of advice from somewhere in Delaware, suggesting that using GDP as our denominator instead of income was misleading in the case of Delaware and other states also. And we gave that some thought and bounced it off some of the other experts who do the world rankings, like Jim Gwartney and Bob Lawson, and agreed with them. So we made that change this year. So yeah, we're open to and interested in hearing from folks on the ground in states. I'm not an expert in all 50 states, and that's helpful to us and improves the product of our report.
Well, in addition to doing the economic freedom of the states now as part of the Economic Freedom of North America project, you've also constructed your own index trying to look at economic freedom across metropolitan areas in the United States as well, right?
So my dissertation was all about U.S. Metropolitan area data, and so this came out in 2013. I probably started on this in 2007, maybe 2008, well before I was involved with the Economic Freedom of North America at the state level. But what I did was I took their state level report and said, well, I'm just going to replicate this, right? It's a model. They've been doing this for a while. I'll trust they've got all the decisions right. I'm just going to change the data out and put in local data instead of state data. And it's not 50 states, it's 384 metros. So it was an enormous undertaking labor-wise. Finally got it published. And of course, by the time I get it published, we're looking at 2002 data. So it's a bit out of date. Now that I'm in this new position at the O'Neill Center at SMU, I'm going to be updating this. And in fact, I made good progress on it when I was on sabbatical a year ago. But anyhow, this is how it breaks down the top 10 areas. It meshes pretty nicely with what you see in the state index, in the sense that you've got a lot of Floridas and New Hampshires at the top. Fort Walton Beach, not terribly far from here, was up there at number 2. And then you got a South Dakota in there as well.
And in terms of driving some of these numbers, it's the low income taxes in Florida, or the Florida's overall economic freedom ranking that's
right. So Florida's near the top on the state rankings. So and it's a pretty big state. There's a lot of metros there. So they're a lot of those up at the top. And at the bottom, well, California and New York dominate the scene. We've got one from Washington State in there. But in most of these, there's 384 metro areas. Most of these are not terribly recognizable names. New York is on there, number 7, and Fresno. Most people have probably heard of Fresno. But yeah, a lot of these are somewhat smaller, medium-sized metro areas. But nevertheless, there is a wide disparity. If you look at the score for the bottom one, it's 3.3. And then 4.2, and then 4.3. On the previous slide, it was about 8 point something. So there's a really wide spread, not only across the country, but as you go to the next one on Alabama, there's a wide spread within states as well. So and here in Alabama, Montgomery, Alabama, took the top spot with a score of 7.1. And then at the bottom was Florence, Muscle Shoals at 5.8. So there's disparity within states as well. And in a way, that was the whole point of this initiative, is that, okay, we measure freedom at country levels. Well, that's not exactly right, because there's a lot of disparity within countries in terms of freedom. And then, okay, we measure it at the state level, but that's not exactly right either. There's a lot of disparity and differences within states as well. So this was an effort to get at that. And as I said, moving forward, I expect to update this more frequently and expand it backwards. So, because this is just 1 year of data, but economists need multiple years of data to give them more units of observation for their statistical analysis.
And I guess one of the things that would be relevant in an update now is the many cities are going ahead and raising, imposing their own minimum wage.
Minimum wages,
above
right.
the state minimum wage or above the national minimum
yes,
wage.
Yes, that will be a big factor for those that are doing that, because ultimately in this initiative, everyone basically is getting the same number, at least within the state, for those states who have different numbers. So there's not a lot of variation across cities in this report, but there will be more in the future. And
just to sort of wrap up here, one other thing we can use economic freedom for, especially when you have like 30 some years of these observations, is to get some sense of what's driving economic freedom, or what's the trend in economic freedom. If you could just sort of briefly, what's the trend in economic freedom here in the United States?
Well, in the U.S., it's bad. The trend is down. We were second back in the year 2000. Probably not surprisingly, people think we're right up there at the top. But since then, by 2008, we had fallen to 5th. So we lost a little ground there. Since then, we've fallen in the last year's report to 16th. I mean, we are behind not only Canada, which a lot of Americans find particularly upsetting, but we're behind all sorts of places that your average American hasn't even heard of. I hadn't heard of some of them. And like Mauritius, Qatar, places like this that aren't everyday tip of your tongue countries. We have fallen in part because federal spending has doubled since the year 2000, and it's tripled since 1990. The regulations are going through the roof, taxes, Obamacare, Dodd-Frank. There's all sorts of interventions in the economy that are driving us down on freedom. So we're headed in the wrong direction. We're still in the top group, but we could do a whole lot better.
Well, thanks very much for coming on and talk about this, Dean. We appreciate your time. And thanks for joining us. Join us again next time for another EconVersations.